You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz, day after Election Day. Well, we're not here to talk about that. We're here to talk about the important things, not who's running who or what's running what, but rather, are you going to be able to retire? Will you have investments that can actually keep up with inflation and keep your head above water? Or are you going to work for the rest of your life? And that's the question. James Locke is with us. James, you've been at this game a long time. Options trader. I think you had a seat on the Philadelphia Options Exchange. Was such a thing. I don't think it's around anymore. Maybe in name, but as a practical matter, it's been absorbed. So you have watched Wall Street progress or regress, depending whether you work there or not, or whether you're an investor.
Sure.
What's your take on things?
Yeah, from the investing point of view, a lot of my clients now on the retail side, I've long left the option world. That was a whole different universe, but now kind of in the dining rooms of the investment world, so to speak. The number one question I end up getting is, can I retire? Right? Because people, we're so ingrained, head down, save, IRA, 401k, and we're pretty good at it usually. And then all of a sudden you get to the end and now there's not as many pensions anymore and things of that nature. So all of a sudden people start looking around at this big pot that they've built up, and they look at it and they say, okay, maybe I have a lot of money, but is it enough? Is it going to get me there? In fact, is my money going to last longer than me? And that's where we can come in and kind of do some education to say, hey, what can your retirement look like? And what do you want to base your retirement on? What you know or what you hope? Those are two different things.
Mm-hmm. So what do we know here?
Well, in the retirement world, and as we're approaching retirement, where our return comes from becomes much more critical, right? When we're saving money, we don't care. And there's an equation in the investment world. I write it up on a board for everyone. The total return on investment comes from two pieces: interest and dividends and growth. When you're saving, you don't care. You just want return. About 10 years before retirement, you want to start making that shift from growth-focused investing to income-focused investing. You want to know that you're getting things from interest and dividends so that, well, essentially you don't have to sell off any part of the farm, right? If all you're doing is getting the crops and harvesting the crops and living off the crops, your farm will be able to produce that income for you into perpetuity. And so it's all about making that shift in investment focus to investing for income. And that, there's a whole universe of income options out there. Bonds, be them government bonds or corporate bonds, but, dividend stocks, preferred stocks, business development companies, REITs, heck, there's insured items, CDs used to be important. Maybe with interest rates going back up, they'll come back into the play. But like you did say, you do have to stay ahead of inflation, and that's important.
Yes. So what are you telling your clients now, James, that we're in this higher inflationary environment? By the government's own admission, 8.5% per annum, in all likelihood, far higher than that. Yeah. And they want to celebrate and pop the corks and say inflation's been beaten. You and I both know that inflation runs in cycles, it runs in waves. We might be having a smaller down wave right now, but who's to say that in 6 months or less, you're not going to see inflation accelerating?
Right. And, that's still on the table, despite what Powell says. Now, if, and the Fed, despite what they say, and if we do see inflation accelerating, you can be sure he's going to keep his foot on the accelerator of raising interest rates. And at some point you do that long enough and you send the economy into recession, and that will fix the inflation automatically. But that's not what you want.
It's not guaranteed either. I mean, we had stagflation in the 70s. Where prices went up, growth went down. You
can even argue we're in stagflation right now a little bit.
I call it steakflation.
For sure. But your question was, what are we telling investors? Well, listen, you can't safely be getting 8-9%, income, interest and dividends, right? So like you said, it is cyclical. So you do have to, try and stay ahead of it as best you can, but understanding that this is not about crossing your fingers and toes in retirement. You're 35 years old, you want to put money in, growth-oriented mutual funds, that's fine. But making that shift in retirement so that you start talking about yielding, mind you, not total return, but what's that interest and dividend component? Because that's the piece you can spend, right? Mm-hmm. And they say, okay, listen, maybe your dollar isn't going to go as far as it used to, but the beauty of investing for income is if you're investing a little bit of your income back into income, it means in the future you have to get more income. So you can actually grow your income over time, right? I always use the example of the rental property, right? If the house that you're renting at the beach, so I'm here in Wilmington, Delaware, down in Rehoboth Beach, if you're renting out a property, you're going to get that monthly income. The price of the house may go up or down in value, right? But you're not going to care because the only piece you can spend is that rent. Same thing is true of your portfolio retirement. I tell them, look at it as if it's a house, right? Your house was worth less in 2008 than it is today, but it hasn't affected your life. Just because your house is worth more, you can't spend that more. And that's super critical in retirement. Think of it as that rental income. You can only spend that rent. And if you can detach yourself from the principal to say, hey, the principal is going to go up or down, but as long as I'm collecting the interest and dividends, I can spend that. If I'm putting a little bit of interest and dividends back into interest and dividends, well, that means I'm going to get more interest and dividends in the future. It's just math. It's not some crystal ball or magic. And, the government is at least helping a little bit by upping how much we can save. Right now, there's IRAs, 401ks are upping how much you can put in. You have the catch up. That's still, once you're over 59 and a half, you can put in an extra $1,000 into your IRA. Right. They didn't up that, but at least they bumped up the $6,000 to $6,500. Depending on your income level, you can get into Roth, so you can prepay some of that tax, right? Because sometimes we look at IRAs as a tax prison a little bit, right? 401ks. You come down the line and all of a sudden you got this big pot of money. You have this $1 million, and guess what? Only 700,000 is yours. Give or take. And there's risk in there. With the stroke of a pen, the government could raise taxes, and all of a sudden only 600,000 is yours, right? So sometimes using the Roth IRAs. And doing Roth conversions, and a lot of that's an income situation, but doing the Roth accounts, now I look at it as you're paying tax on the seed and you're going to harvest the crop for free, right? No tax. So, and again, everyone's personal situation is different because you don't know what your pensions may or may not be, your Social Security may or may not be. It's all about finding out how all the spokes on that wheel of retirement income fit, right? So that you can take this nest egg that you saved up and generate that I component. Right. The return is from that I, that interest and dividends component, because that's the piece you can spend, and that's the piece we can grow into the future so that you'll know your money is going to last longer than you.
Mm-hmm. Okay. And that is everybody's goal, is not to have your money run out before you run out, right? You don't want
to. Right, and it can be done. I mean, it's not, listen, there's risk in everything, but it can be done. And part of the problem that we see is that there's a whole lot of stock market cheerleaders out there, and we see it all the time because that's really where the world is in this head down, save mentality, and don't worry about it for the future. But 10 years into retirement, heck, somebody who's 72, they have zero time, especially if it's in an IRA. That money's coming out, right? And very rarely does the government give you a pass, right? Well, we got the pass in 2020 where we didn't have to take distributions. If I remember correctly, what was it, back in 2008, they gave everyone a pass, right? But, here we are, markets down, whatever it is, down 20% on the S&P. NASDAQ's down even further. And if you have all your money in, safe ETFs and things that are in the Dow, well, guess what? You're down 20%. And then you got to take a 4+% required minimum distribution on top of that. Now you're selling off part of your farmland, right?
Gotcha. So what do you think is going to be with the market here? Do you have any prognostication that you want to share with us here?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Right. So now we're looking into the crystal ball, which is a little different than the income, right? And I do. And here's the thing. I absolutely see recession next year, right? Whether it's second quarter, third quarter, and let's just put it in quotes, real recession, because I guess we already had 2 negative quarters of GDP, but you can make the argument that unemployment's still low and all those factors. So there is more to it than, just some numbers on the page coming off all of this, unprecedented money printing and quantitative easing we've been doing. But there's definitely a slowdown. Powell wants to slow down. The Fed wants to slow down. We're going to see it. It's going to happen probably, like I said, mid next year. And I think if we're lucky, the stock market has kind of, factored that in to a degree. And we're going to get a lot of left to right, that's where the volatility comes in and things like that before we can get out. And ultimately, we're not going to see stocks really, broadly speaking, go up until everyone is confident that not only are these rate hikes stopped, but maybe even on the future, hey, when's the first cut coming back? And we're getting that indication, that they're going to maybe get the Fed funds rate up to 5, 5.25, and then sit down and slow down. And it's really important that they do slow down, because I always look at the Federal Reserve as like an airplane.
Yeah.
You can't just pull back on the throttle and expect everything to stop, because the plane's gonna fall out of the sky. You got to do everything in increments, and these 0.75% bumps every time, like we just don't have enough time to let it settle in. Mm-hmm. So we got to let it settle in, see what is going to happen, see how it plays out. And it may be enough already, because again, we don't want to send it into a point where businesses are firing and not expanding and unemployment starts popping, and then true, recession solves the inflation problem. And that's not good for anyone.
Well, that's no solution. That's for sure.
Yeah.
Right.
But the income message that we give to our clients is, hey, regardless of market conditions, that you can continue to live that retirement of your dream, right? Not just what you need, but what you want, right? And even in a period of sideways market or even down market, you know that, hey, I have my money I can spend, plus I'm putting a little money back into income. And as crazy as it sounds, and I explain this to people, hey, when the market goes down, you're buying those same income investments cheaper.
Mm-hmm.
So it's spring loading. When it comes back, your income's going to pop even more. And they never believe you until they actually look at it on the page. I try and explain, hey, this is what we do. But after a while, heck, we saw that with 2020 when markets started going down and dividends kept coming in. Well, you reinvest things cheaper, and when the market comes back, your income just keeps going up.
Mm-hmm. And that's a good thing too.
Yeah.
Had a lot of those double-digit bonds once upon a time back in the 80s, and they paid off for many years. All right.
Sure.
So recession in the offing, and look for cash flow. Anything else? Any other words of wisdom?
Yeah. It can't hurt to go out there and make sure you talk with a number of people, right? Just because you've been working with someone and you feel comfortable, remember, this is your retirement, your future. Make sure you're working with someone who's a fiduciary and an income specialist who is going to listen to your needs and not tell you what you need.
Mm-hmm. All right. Well, that sounds good to us. People want to find out more about you, James, connect with you on the web. How do you do that?
So the website for me specifically is poollocke.com, POOLELOCKE.com. You can check out our website, and we're part of a larger organization called Sound Income Strategies, and that's just like it says on the website as well. And it's right there in our middle name, income.
Okay, we like Sound Income for sure. Hey, got a question for James? Shoot me an email, kl@kerrylutz.com. And while you're at it, you're at the site, just click subscribe to your free newsletter, and we'll be having one going out very shortly. James, really appreciate your stopping by. We'll talk to you again real soon.
Hey, thanks, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.